Thank you all for joining. I know we've had a lot of people sign up and looking like a pretty good turnout so far. So obviously there's a fair bit of interest in what we're going to talk about today. I know a lot of you may not know us, so just as a quick introduction, my name is Boris Kresic. I'm a partner in the PKF Sydney tax team. Been with PKF for 3.5 years now, where I'd say I specialize in corporate tax for privately owned businesses, but have clients ranging from individuals up to multinational sort of SGEs and listed companies. Joining me today is Garry Mathoda, who's a director in our tax team. Garry joined us from the tax office a few months ago, and at the ATO, Garry worked in the top 1,000 program, where he worked very closely with the assurance teams reviewing taxpayers, and was quite heavily involved in tax governance. And I should probably also mention that before coming to PKF, I also spent a few years at the tax office, both in the private groups, where I was part of the top 500 team, and then also the top 1,000 team with Garry, where I provided technical assistance to the engagement teams. I'll let Garry sort of talk to his experience a bit later on. I guess I really just wanted to make that introduction, not so much to promote ourselves, but really because I think it's relevant to the topic at hand for a couple of reasons. So I think tax governance, probably more so than many other areas of tax, means very different things to different people. So we're not talking about a piece of legislation that applies equally to a small business or a large business. The way that a small business will approach tax governance and the ATO's expectations of that business are quite different to a large multinational business. I know we have a number of attendees today, probably from a number of different types of sizes of business. So we are going to be very sort of mindful of that. I don't want this presentation to be about giving a rundown of the ATO's sort of comprehensive tax governance requirements that may not be relevant for a small business. So we will try and be mindful of that as we go. The other, I also touched on our ATO background, and again, I did that because I think it's quite relevant to today's presentation, because again, unlike other parts of legislation where the taxpayer can sort of largely apply themselves, ultimately this comes down to something that the ATO will be looking at and getting something in place that the ATO will be happy with. So understanding, what the ATO's thinking is, what their expectations are with different types of taxpayers, I think is quite important. And that's where I hope we, and sort of in particular Garry, with his more recent ATO experience, can shed some useful insights for you. Okay, so in terms of an overview of what we're going to be talking about today, so I'll start off and I'll provide an overview of the justified trust methodology with an explanation of how tax governance actually sort of fits within that methodology. Garry will then go through what good tax governance means for different taxpayers and what the ATO's expectations are. And again, we will, try and be mindful of the fact that we have participants from a range of different businesses here. So we'll try and make our inputs useful. Garry will also talk about how to prepare for future ATO engagements. And then we'll finish off with a section on how PKF can assist you. And then I'll try and leave about 10 to 15 minutes at the end for a Q&A. So we thought about how the best way to do it. And typically I do like sort of questions on the go, but I think given that it's a webinar and given the fact that we've got a couple of hundred attendees who signed up, I was a bit concerned that if we had questions on the go, we may not get to finish the presentation. So if you do have questions, feel free to put them in the Q&A. I think we can sort of monitor that throughout. Hopefully we answer a lot of those through the presentation itself, but we'll then look to answer any unanswered questions at the end. And obviously, if there's anything beyond that, I'm happy to sort of take it offline, or if there's anything that's sort of more specific or confidential. Context, I've sort of spoken a bit about this already, our industry experience and sort of ATO experience. Probably really the point that I wanted to highlight on this slide is the last one, where I think both of us, having sort of worked at the ATO in the industry, I think we can, I certainly appreciate that tax governance can seem rather overwhelming for some taxpayers. If you go to the ATO website, the sort of requirements are, seemingly quite onerous. And that's, we'll sort of get to that, but I think a lot of that stems from the fact that it was designed initially for very large taxpayers. So there is still a bit of an unknown for other taxpayers, smaller taxpayers, in terms of how, what it actually means for them.
Yeah, I might just add to that, Boris, and say two things. So one, thanks everyone for joining. We've had over 200 participants to attend this webinar, which shows a lot of willing participation. And I remember when I was at the ATO, and tax governance justified trust was really in its infancy at the time. It was being developed. Big focus of that was wanting willing participation from key industry participants and taxpayers. So thank you all for joining. That's awesome. Secondly, as Boris said, and particularly on that third dot point on the slide there, we know that tax governance and the requirements can feel quite onerous. It can feel like a lot. And so the hope is that we can make that a bit more palatable for a lot of us here today. And from my own ATO experience and having worked on hundreds of taxpayers and hundreds of justified trust reviews, I can tell you that the ATO is very much trying to adapt these theories and these concepts to make it fit for purpose. So, if you see something and you go, wow, that's a lot because I'm a smaller business, well, the ATO appreciates that. There is recognition of that. And the key is to try to adapt to that and to mold to those requirements. The other thing, before we go on to the first polling question, these slides will be made available to everybody. So don't feel free to, feel free to take notes, but don't feel the need to do so because you will get the copy of these notes as well.
Cool, thank you. Okay. So we're going to have a few of these polling questions throughout the presentation just to get a bit of engagement and also understand a bit about the attendees. So the first one is quite a basic one, just to get a feel for how familiar are you with the ATO justified trust methodology and the ATO's expectations about tax risk management and governance. So are we very familiar, somewhat familiar, or what are you talking about? Basically, I know nothing about it. I'll give you maybe 10, 15 seconds just to sort of see how that comes in. Okay, so what is that? So we are probably not that surprising, to be honest. So very familiar. I didn't expect many. So unless you're in a tax team of a very large corporate that's sort of gone through some of these programs for a number of years, I wouldn't expect you to be very familiar. So we've only got one attendee, and then the rest are split into somewhat familiar, and there's actually quite a few, 60, who are, basically in the I know nothing stage. So I think that's good. I think that's sort of how we'll try and pitch the presentation. So that's some interesting insights there. Yeah. Okay, so ATO's approach to engaging with larger taxpayers. So one thing that you sort of may notice from this slide is that it doesn't actually talk about tax governance at all. I don't think it's even mentioned. So I suppose, why is that? And I think it's in order to talk about tax governance, it's sort of really important to understand the context within which it sits and what the ATO's expectations are. And I think to do that, we sort of need to go back to basics, so back to what the ATO used to do and what they're looking at, changing. And so historically, the ATO has predominantly engaged with larger taxpayers based on a tax risk assessment. So as the examples there say, so the ATO would identify a risk. So this would be based on a tax return disclosure, a large loss or a one-off transaction, or they could be aware of a systemic risk in a certain population. They would then look at taxpayers in that population and undertake a review or an audit to understand or to get comfort over that particular taxpayer. Now, that sort of approach obviously has a number of limitations. So one of the big limitations is that the ATO has to accurately identify a risk. So they've got to identify a risk and they've then got to apply that to a taxpayer. So it's really a reactive type of review. The other sort of issue with this type of approach is that it naturally lacks focus. It lacks coverage because you identify a risk and then you apply it to taxpayers, and inevitably there will be a number of taxpayers who simply just never get looked at. So, rightly or wrongly, taxpayers can simply fly under the radar under this historic approach. It's probably worth noting that when I say, although I say it's a historic approach, it's not fair to say that it's gone. It's still in use today. You can still expect the ATO to ask questions based on your tax disclosures. When I was at the tax office only 3 years ago, I worked on a program whereby we were trying to identify taxpayers who fit within a certain risk profile based purely on their tax return disclosures. So that was, very much thinking 3 years ago. I'm not sure whether that program has been shelved or if it's still in some sort of use, but it sort of just goes to show that, when I talk about the historic approach, it's more for context and it's not to say that it doesn't exist anymore. But really, one of the issues with this type of approach is that it lacks coverage. So
I'll just add to that briefly and say, when we talk about coverage, so as with a lot of the ATO programs, they're based around funding. And so the funding for the programs to deal with the justified trust issue and the implementation of that really came about at a time where politically there was a desire to give the community greater confidence that larger taxpayers are paying the right amount of tax. So to do that, it was thought that a program would be initiated whereby the larger end of town would be looked at, so top 100 program, for example, under a justified trust methodology, and then to see what the results are, to be able to tell the community that the top end of town is paying the right amount of tax. That's sort of the origin of a lot of this. Since then, we've seen that then go down into other programs. So we've moved from the top 100 to the top 1,000, and I know we'll talk about these programs in a bit in more detail. But what we've seen is a cascading of that application of that methodology from the very top end of the town through to other taxpayers and no doubt taxpayers that are participating in this forum today. So it's just important to keep that, I think, in mind as well, and some context around that too.
Yeah, absolutely. I think that's what I think the next slide sort of touches on. So we had this historic approach, tax risk-based approach. The ATO then looked to move to a justified trust methodology, which had its origins with the OECD. And as Garry said, it was then implemented here with a sort of political view to giving the community confidence that the big end of town is paying the right amount of tax. And I know it was a big focus internally at the ATO. I personally tend to agree with it. It's almost this view of, if your average taxpayer is sitting there and going, oh, these large companies aren't paying tax, then they are far less likely to comply. Whereas if they can have comfort that the large end of town is actually paying the right amount of tax, then they are more likely to pay the right amount of tax themselves. So the concept of justified trust is about building confidence between the ATO, the taxpayers, and the broader community. And even just as the name itself suggests, it's aiming to get to a place where the ATO can ultimately trust that the taxpayers are paying the right amount of tax, but there has to be a level of justification to that trust. So they can't simply say, well, these are the rules, we expect everyone to follow them, and we'll assume that they do. So they've got a methodology in place to ensure to give them confidence that taxpayers are paying the right amount of tax. And yeah, I think Garry also mentioned the fact that it was rolled out initially for the top end of town. It's now cascaded. I think it's fair to say that the ATO sees merit in it. It's probably, I'd say it is here to stay. But because it has its origins in that top 100 or big end of town, it can at times be difficult to apply to smaller taxpayers.
Yeah, and I think just with the benefits of achieving higher levels of assurance is something that is often asked. So the tax office comes and does this, applies this methodology to your group. The question that is quite often asked is, well, what is the benefit to me in achieving higher levels of assurance? And the consistent message from the ATO around that is that this is not a one-off application of this methodology. This methodology is here to stay. It will be reapplied to your organization again. And depending on the outcomes from the first time, that will dictate what this scope looks like the next time. So where you get higher outcomes or higher assurance outcomes, typically that means in the future a lighter touch. So what does that mean? It means a smaller RFI. It means a focus on sort of what's changed as opposed to a holistic review again. And it means a shorter engagement, which is more cost effective as well. So yeah, there is certainly a carrot there in getting to higher levels of assurance.
Okay, so second polling question. So just want to get an idea of where our participants sit in terms of population size. So we've got the top 100, which is, you're essentially the largest 100 public groups. And I think if you're in that space, you would know it. The ATO has already engaged with you. The top 1,000 is again for large public groups with turnover over 250. Top 500 is for private groups with turnover over 350. Top 5,000 is for private groups over 50 million. And then the last one, medium and emerging, is a new population that the ATO is looking to kind of bring into this program over the next few years, which is looking at taxpayers in the $5 to $50 million range. And
while we're just waiting for the results to come through, I might just make mention that these groups, so when we say top 100, top 1,000, top 500, etc., they're not fixed. They're ever changing, and so you may not be in it in 1 year. You may come in and out. You may change which one you're in. So it's important to always have an understanding of where you currently sit and where you're likely to be reviewed.
Yeah, and look, judging by these, again, the results are not surprising that there's no one in the top 100. We have one in the top 1,000, so they're really the ones that would have had a review to date, as well as a couple in the top 500, and really everyone else is in the category of you're in a group that most likely has not been looked at yet, but is very much in the ATO site. So you are, or you can expect to be looked at in the next few years. So that's interesting. Thank you. Okay, and the last slide that I wanted to go through before handing over to Garry is just an overview of this justified trust methodology. So again, if I sort of recap, we've said this is, we've spoken about the historic approach. We've spoken about the ATO's desire to move towards the justified trust methodology. And then I guess the next logical question is, what exactly is it? So probably first thing I'd say is that it is applied differently to different taxpayers, as you would expect. So, your large end of town will have it applied differently to a small business. But in all instances, the justified trust methodology has these 4 pillars. So the first one of those is tax governance, and that's what Garry's going to be talking about in the rest of the presentation. And this is effectively the ATO looking to understand, or now expecting that taxpayers have a certain level of effective tax governance in place. And I think the reason this one is important, and is sort of the focus of our discussion today, is because it is a very controllable pillar. So, some of the other ones are often in some ways out of the control of the taxpayer, whereas this is a controllable factor that taxpayers can get ready and essentially be on the front foot with the ATO. The next one is tax risks flagged to market. So this is, as you know, the ATO consistently releases ruling, PCGs, etc., where they identify high risk areas. So when they are undertaking a review, they will look to see how a particular taxpayer fits within those. They will also review significant and new transactions to ensure they've been treated appropriately, but also more typical transactions, because obviously if those aren't being reported appropriately, it sort of creates a bit of a systemic risk. And then the final one is a review of differences in accounting and tax results. So, it's sort of quite basic, looking at your statement of taxable income, understanding what adjustments are made, and naturally, if there is a large difference with taxable income being much lower than accounting, that would typically be something that would give rise to a higher risk unless it can be explained. A question that I often had asked, and I've also had it initially, so what does this actually mean for a taxpayer? How is this approach different to the historic approach? So, 10 years ago, the ATO may have identified a risk and then reviewed me. Now I'm part of top 5,000 population, and they're reviewing me. So they're, the reasons for reviewing me may be different, but at the end of the day, I'm still being reviewed. So what does it actually mean? So I'd say probably fair to say that the initial review may not be all that, experience may not be all that different. So the ATO, would have before looked at your major transactions, your taxable income calculation, and they'll still look at that. One major difference is that now there is this expectation that you have tax governance in place, which wouldn't have been present, 10 years ago. But I'd say the bigger difference, which we sort of spoke about earlier, is this concept of coverage. So previously, certain taxpayers could have just flown under the radar for years and years and would have never been looked at. Whereas the justified trust methodology requires the ATO to actually look at everyone in that population. So essentially, if you are now part of that population group, you can expect to have an ATO review, in the next few years.
Yeah, I think just with that as well, a question we're quite often asked is, well, what's the ATO going to be focusing on? What are they going to be looking on as part of that review? And what I will say is the ATO is actually quite transparent in what they've been looking at and what they found for the various populations. So the ATO periodically publishes findings reports. So you can go find these on the ATO website, but they'll give you an idea, if you want further idea, around what it is the ATO might be looking for your population, and where the investigation might head as well. Okay,
I will hand over. No, we've flown.
So I think we'll just step back through the slides back to second section.
That is. Okay.
That's okay. So as we're finding our way back to the right section, I might just maybe start talking. And so this section is going to deal with the ATO expectations about tax governance. And we'll start with the polling question, if we can get that up. Yes, so polling question 3. So the question is quite a simple one, really. It's, have you documented your tax risk management and governance framework? And we'll just give it a few seconds while the responses come through.
Try out the keyboard. I hate that, just goes crazy.
All right.
Seems that.
Okay, so the results are coming through, and we might just stop it there because it's overwhelmingly suggesting that no, most of the participants on this call have not documented their tax risk management and governance framework. 25% odd have said yes, and that they've got something in place, and a couple have said that it's actually what they've got in place is very comprehensive and contemporaneous and periodically updated, which is really impressive. So well done to those few. But yeah, no surprises there, I think. What we found, what myself and my teams found at the ATO when we were reviewing taxpayers is that quite often the first time that taxpayers were turning their mind to governance was when we came and asked. And what I can say is that those other taxpayers that were actually prepared and had processes and procedures documented had a smoother experience, I think it's fair to say. So it's very important to get on the front foot with this stuff. And hopefully, as we go through this presentation, we can explain kind of a little bit about what is required, this idea of what is fit for purpose, and hopefully take away some of the confusion around tax governance and expectations as well. So go on to the next slide. So the heading here is ATO expectations about tax governance, but really the subheading, I want to just reflect on that a little bit. So the subheading here is tax risk management and governance and documented practices. So quite often when we talk about this topic, we talk about tax governance, but really you have to put that in context of what it is the ATO is hoping to achieve by lifting the standards of tax documentation and documented practices. And that is to effectively get an understanding of how entities, organizations are managing their tax risk. So it's the tax risk management piece that is actually paramount here. The governance and the documentation follows. So if you have good practices and procedures in place, you document them, that gives the ATO typically confidence that you're on the right track. So always remember that tax governance, what it's really getting at is this idea of tax risk management and how your organization deals with that. So a couple of the dot points here we've borrowed from the ATO website, but the bold point there around tax governance is particularly important because effective tax governance provides the foundations upon which a group can demonstrate that they are achieving the other three key areas of justified trust. So whenever you see those 4 pillars of justified trust presented, tax governance is the first one. It's always presented as the first one, and it is really the foundation upon which this justified trust methodology is built. So it's very important to have an understanding of it, understand the expectations, and as the bottom dot point on our slide suggests, documentation is critical. The ATO in its reviews will come in, will ask questions, will be able to formulate a view, but at the end of the day, having that process and framework documented is paramount because the ATO works on evidence, and evidence that is presented through documentation that is contemporaneous, that is periodically updated, is the best form of evidence you can present to suggest that your tax risk management and governance framework, documentation, etc., is really good. In terms of how the ATO assesses tax governance, there's really these 4 sort of principles that it uses. The first one is that you have no tax risk management and governance practices, and sometimes you'll hear that referred to as a red flag. To be fair, I would say not many taxpayers fall in that category. What you will find, even if you don't have something documented, you still have processes and procedures in place. Simple one for that would be you prepare a tax return in-house, but then you get it reviewed by an advisor, right? That is a control that shows that you have a practice in place to ensure appropriate management of tax risks associated with your tax return, for example. The second sort of review area is that you've got tax risk management and governance practice that exists, right? So that's the example we just went through. You've got this practice that exists, but it may or may not be documented. And like I said, documentation is critical. So if you don't, let's get on to that. Then we start getting into the higher sort of outcomes for tax governance. And here what the ATO is looking at is whether the practices you have in place are designed effectively, and then finally, whether they're operating effectively. And we'll talk a little bit more about those last 2 points on the next slide. But again, documentation is critical. As I said at the start, as Boris said at the start, we know this can feel quite overwhelming for a lot of taxpayers. It can feel like a large exercise, very onerous exercise, but it doesn't have to be. It can be as simple as just taking what you've got and documenting that. And that's really the starting spot and where you want to start and go to from there. So with regards to the higher assurance ratings or the higher ratings for tax governance, as I said, this is where the tax risk management and governance framework is shown to be designed effectively and operating effectively. Now, to show that your framework is designed effectively, the ATO requires what is known as a gap analysis. And the gap analysis at a very high level is a comparison of what you've got in place, documented or not documented, against what the ATO would expect of a taxpayer of your size. Where there are gaps, hence the term gap analysis, then it's a matter of addressing those gaps to make sure that the procedures and policies in place meet the ATO requirements or satisfy the ATO of its requirements. So that's a gap analysis. And if you have a gap analysis, you've undertaken the gap analysis and you've covered those gaps, the ATO would largely say your tax risk management and governance framework is designed effectively. Now, the highest rating when it comes to tax governance is where the ATO concludes that your tax risk management and governance framework is both, it exists, it's designed effectively, and it's operating effectively. And to achieve that level of assurance, to that level of outcome, you need to have what is known as a testing plan and be undertaking periodic controls testing. So when we're talking about operating effectively, what we're looking at is what are the controls that are in place within your framework to manage effectively your tax risk, right? So what are the controls? once we've identified those controls, it's then about putting in a testing plan to see, well, are these controls actually functioning as they are meant to be? And you then go and do the testing to see whether they are or not. Where they are, great. You would say then that the tax risk management and governance framework is operating effectively. Where they're not, obviously need to take some steps to alleviate the concerns that have come up. Now, in my personal experience at the ATO, not a lot of taxpayers actually achieve the operating effectively level. And I feel a lot of that is just to do with the fact that it is a step-by-step process in documenting, undertaking gap analysis, doing the testing, etc. So it takes time to actually have these things set up and running efficiently, such that you achieve operating effectively ratings. So that is the high bar that we want to get to, but it takes time to get there. So
and your experience that you're talking about, that's again in the top 1,000 programs. So these are your large multinationals with turnover of more than 250 mil. And based on that poll we had earlier, there's only a handful of us in that. So I think the rest of us are in the next population group. So it's probably fair to say that very, very few, if any, in that population group at this stage would be at that level of documentation. So it's really about, like Garry said, building it up. So the very first step being just actually documenting the existing practices, because most of you already have some sort of existing practice in place. So it's really documenting that. And then the next ones are, about where you want to get to, over the next few years.
Spot on. And again, the ATO appreciates this. They appreciate that different taxpayers of different sizes are at different stages in this journey. But it's, let's work out what you've got and let's get that documented. That's really the starting spot where we want to get to for everyone. The next slide is a polling question. So just a couple of minutes for everyone to have a look at that. But the question is, have you undertaken a gap analysis of your tax risk management and governance framework? The response is, the responses are coming through, but overwhelmingly we're saying no, which is consistent with what we've seen in the earlier responses of the polls. But we do have a couple of taxpayers here, participants that have said yes, which is great to see. Overwhelmingly the response is no. So, and I think we have another polling question straight after that on the back of what we were talking about, which is, do you understand the importance of implementing a tax risk management control testing plan and undertaking periodic testing of those controls? And so the responses are coming in here, and seeing a lot of yeses, which is great. A couple of no's. Okay, so overwhelmingly the response there suggests yes, that we do have an understanding of the importance of these things. And a couple of us are saying no to that. I think just on that as well, I want to emphasize the periodic testing part, because it's with these tax governance frameworks, it's quite often easy to put something in place and to almost set and forget. What the ATO wants is for these frameworks, this documentation, the procedures, everything that we have in place to actually be a living and breathing sort of document. And, it's not something that is fixed in place at a point in time, but something that changes and adapts to the organization as over time. And that's really important to recognize that. People often ask with periodic testing, do I have to do this every year? And that was something that the ATO actually grappled with initially. And I can tell you from a top 1,000 perspective, the answer was no. It's, once every 3 years was seen to be reasonable for the periodic testing component. And you can only imagine as we go further down to top 500, 5,000 programs, you wouldn't expect it to be any earlier than 3 years for that periodic testing. But it is important that those documents are reviewed annually just to see if anything has changed. Quite often you'll have changes in the key tax team, key management, board, etc. So all these things need to be updated regularly to show that it is a living and breathing document, which the ATO wants it to be. The next part of our presentation is about how to prepare for future justified trust engagements. So like we said, if you are part of these programs, top 100, 1,000, 500, 5,000, and a lot of us are here, you can expect, if you haven't already been, to be contacted and to be reviewed under this justified trust methodology. Understanding where your business sits is paramount, right? So, and I think most of us had a good idea of where we sit. The ATO, again, through its transparency, makes a lot of information available on its website about what your experience will look like. They call these roadmaps. And so if you want to have a better idea of what your experience might look like through one of these reviews and engagements, I encourage you to go on the ATO website and have a look at that. Or you could contact one of us and we can have a chat about that. In terms of preparing, I would say the first thing to do is to look at what is publicly available to understand what the expectations are going to be, right? So those roadmaps are a great starting spot. And also the ATO does publish RFIs, so requests for information. The initial one is typically pretty standard. And you can find these again on the ATO website. It'll give you a good idea of, if you're in the top 1,000 program, these are the questions that will be asked of you. If you're in the top 500 program, this is the line of inquiry, et cetera, et cetera. So that's a really good way to start preparing and to start thinking about, well, what's going to be expected of us. Obviously, when it comes to tax governance, as we said, have a look at where you're at, right? So this should not feel like an overly exhaustive exercise, but it should be one where you reflect on what are the practices that currently exist and think about whether you've got these things documented. If you don't, starting spot one, get it documented. Let's get documented the management controls, the board level controls that you've already got in place and see what that looks like. If you've already done that or you want to go to the next level, well, then it's about undertaking the gap analysis that we were talking about before. And that can be done to identify those gaps and then to work to resolve those gaps. That's kind of the next spot. For those of you that have documented your practices and undertaken the gap analysis, well, then it's really about that real high levels of ratings for governance, and it's about implementing your testing plans and undertaking the testing to see if reality equals expectations. Is it that your framework gives you these outcomes that you're expecting, or do you actually get something different, in which case you have to go back and have a look at your framework to see what needs to be changed to make some tweaks. In regards to testing, just a little tip there, the ATO does require that the testers or the people undertaking that testing be independent of the tax function. And I think that's pretty sensible. Now, that can be somebody independent of the tax function internally, like an internal audit type function, or an external advisor to come and help. And I know through my reviews at the ATO, the use of external advisors is quite a lot in that space, for good reason.
I'm going to jump in with a question, which maybe some would have asked at the end anyway, but I guess this is practically speaking.
Yep.
It's a question that I've had asked is, what, it's almost quite basic, like, what does a tax governance document for, someone in that next 5,000 population look like? Because I think, again, going back to our earlier point of this seeming like a very onerous task, I think, if anyone's actually seen some of these governance procedures, they've typically been done by the top end of town, and they can be hundreds of pages.
Yeah,
we're talking manuals, and I think a lot of people understandably look at that and kind of go, what do I actually need to do?
Yep. Yeah, it's a very good question. It's a very valid question, and it's one I think that the ATO is still grappling with itself, to be honest. But what you would expect to see at the very basic level is details about the tax function. Who's involved, who does what, who are the key people. If an advisor does the review work, who is that advisor? Ideally, you would also see details about timelines, when things go to the advisor, when they typically come back, that sort of thing. What I'll say though is, a lot of the examples we give might be income tax specific, but the ATO, when it comes to this tax risk management and governance framework, it's not just about income tax. It's looking at all taxes that are relevant to the organisation. So, when we talk about the tax function, we're not just talking about income tax here, we're talking about GST and other taxes that are also relevant to an organization. But yeah, at the very basic, you want to have details about who's involved in tax return preps, who does the review, is the board appropriately updated on tax risks that come up. That is something that is very important to the ATO. So the ATO wants to know and wants confidence that the board, or in the case of maybe some top 5,000, and 500, whether the ultimate owner is actually kept up to date on tax risks. So, making sure there is the buy-in of the board as opposed to just management is very important as well. So there are a couple of things, but look, I would say it's again, it's really about looking at what you've got, what you do on a day-to-day basis and getting that documented, and then assessing that against the ATO published criteria. I think that's the way to go about it.
Okay. So the last part that we wanted to talk about before moving on to a Q&A is just, talking about how PKF can assist you. So as Gary's already spoken about, he's obviously got a lot of experience working at the ATO, looking at tax governance. But I guess the question which I sort of alluded to before, which I've often been asked, and which is different to other areas of tax. So, typically a taxpayer knows that they need to lodge a tax return and they know how we can help. So it's a very simple process. With tax governance, it is still very much this unknown. And I still have a lot of taxpayers sort of genuinely asking, well, what is it at a basic level? What does it actually mean? For me, what do we as an organization need to do? And then how can you help us? And I think, as sort of mentioned throughout the presentation, a lot of it really does depend on the taxpayer, the level of the size of the taxpayer, the sophistication, the complexity of the business. But if I suppose if I had to summarize how a good engagement would look like, it begins with actually understanding the client. I've had a number of people ask me, is there a template that we can use for tax governance? And I think, the short answer is probably yes, like with a lot of things. You can go to the ATO website and it does have comprehensive information about tax governance processes. But as we've said, most of that, or a lot of that, is for big taxpayers. A lot of that may not be necessary for a smaller taxpayer. And sort of trying to take this sort of cookie cutter approach ultimately won't result in an effective policy. So you can have you could take what's publicly available and turn it into this really comprehensive document. But in reality, if it's not something that the organization is capable of or willing to actually implement on a day-to-day basis, it won't actually help them manage their risks, and it also won't really help in the instance of an ATO review. So if the ATO comes and reviews it and they go, okay, this is great, we've got this 100-page policy, but if they sort of start asking questions and going, okay, well, how is this managed? It would quickly become apparent that it isn't actually an effective policy. So really, I think it comes with understanding. It comes with understanding the business. So some clients that we work with very closely, we probably already understand them fairly well. So we would probably be in a position where we could help them design this. Other clients who we may interact less frequently with, or new clients, it would probably start with at least a meeting or two where we get to understand what their business is about, what their tax risk factors are, how their team operates, what we can actually. Only with that can we actually put in a useful framework in place, because, as I said, there's no point in us putting in a framework in place that isn't going to be used, and it's just going to be a document that sits there. And the last point that I wanted to touch on there, so obviously, today's focus has been on tax governance. I guess I just wanted to also touch about other ATO engagements. So, in some ways, tax governance is an ideal type of engagement to have, because it is a proactive one. You're being on the front foot. and you're making sure that you're documenting your policies to ultimately reduce your risk. But as we all know, that's we don't live in a perfect world. So some of you may already be under review, maybe under audit. The ATO maybe should amended assessments in respect of something, or you may be looking to implement a transaction where you've got, where you need certainty. So you're looking at a private ruling. So really, I guess I sort of wanted to highlight PKFs and particularly sort of Garry and I's experience at the ATO and how I think that can help with these types of engagements. Some of those are really basic. I mean, having worked in practice as well as the ATO, like the most basic one of those is literally just treating, or just putting yourself in the shoes of the ATO officer. It seems so basic, but I mean, I haven't actually seen it in practice so much, but I certainly saw it when I was at the ATO, where certain agents would be just unnecessarily aggressive and would almost see it as some sort of contest between them and the tax office. And it really, I don't think it ever really served a positive purpose.
Yeah.
At the end of the day, the officer there is looking to, is doing a job, and you really want to make that job for them as easy as possible.
Yeah, and I think just on that, something that often comes up during the course of an engagement with the ATO is timelines and managing timelines. And I must say that is very important to try to proactively manage that from the start. Like Boris said, the ATO officers are there to do a job, and they have their own requirements and time constraints, etc. So, if you do find yourself in an ATO engagement and you can see that, financial year end is coming up, I'm going to be particularly busy over the next month or two, it's really important to just communicate that to the ATO up front. 9 out of 10 times, the ATO officer will appreciate that. They'll understand that. They'll feed that up to their superior, whoever that is, and that can be reflected in your timeline and give everybody a better experience. So it's just partnering with to get to the right resolution.
Exactly. And look, and ultimately, sometimes you will have, despite your best endeavors, you will inevitably sometimes butt heads with someone, and you may, either get pushback, or you may be getting someone who's just not giving you a reasonable outcome, or just, or isn't being reasonable in their approach. There are, I suppose, levers to pull in those instances. It's not something that I would recommend, or certainly not as a starting point, and certainly not something that you would use frequently. But I guess between Garry and I, we've sort of got enough experience of how the organization works to know when it is actually appropriate to pull those levers, when you want to bring in someone more senior, like an assistant commissioner, because again, I have seen it, and it can actually move things along. You've just got to be very careful of how you use it. So I think that wraps it up. So we've got about 10 minutes left for Q&A. My fear of being overwhelmed with questions has not come to fruition. We've only got 2 so far, but maybe everyone was waiting for the end. So I'll read them. I'm not sure if everyone else can see them, but the first one is: in an emerging organization, we don't have a large resource, an accountant and an external tax advisor who submits returns. Who would be independent enough to review the gaps? Yeah,
it's a great question, and it's a question which a lot of people, especially in the medium and emerging space, are going to find. What I would say is that firstly, the expectations around your governance practices, your tax risk frameworks, is significantly lower than what it is in the other populations. So if you have somebody internal that is separate to whoever does the tax function, get them involved, get them to assist, to look at it, and do your best to get that degree of separation, the degree of independence. Of course, if you can use an advisor, that's best. But anybody that's independent of actually doing the tax return work or the tax work, independent of that function, would give the ATO some confidence that there is that degree of independence.
Okay, another question. So I apologize if everyone can read these and I'm just unnecessarily reading them out, but I will do anyway. So it says, presumably the ATO would expect that in a wholly owned group with multiple operating businesses, each operating business should have its own governance framework documented and implemented. For example, the requirement to implement a framework applies to the definition of taxpayer. So if a member of a tax consolidated group still pays its own GST individually, for example, that member should also have its own framework.
A good question. Look, I would say that the ATO isn't maybe not as black and white around their requirements as this question might put it to be. The ATO likes to take a holistic approach. So they're looking at the organisation, how the organisation manages tax risk within its framework that is set out. So if you can go to that step of doing it for separate entities, well, that's fantastic. But overall, the ATO is looking at the overall approach to managing tax risk. So, you know, I think it may depend on, you know, what your structure looks like. You know, if you've got different people doing different things for different entities, you could feed all that into one document, a master document, or you could have it separately. So,
because I guess in reality, so here, so we're saying that we've got a tax consolidated group, but not consolidated for GST. I suppose that would be relevant if a single entity was being reviewed for GST, whereas I think in practice, if there was to be a review, it would most likely be a review of the group as a whole for both income tax and GST.
Yeah, for the most part, the ATO is moving to what they refer to as these combined assurance reviews, where they're looking at income tax and GST at the same time. And typically there will be crossover of the groups and consistency there.
Okay, we've got another question. What are the risks and penalties of not complying? So I guess, I mean, really the first thing is this isn't legislated. So there is no, you know, there is no penalty for not complying. But not having the right tax governance in place will mean, so as we've said before, if you are in one of these population groups, you can expect the ATO to review you. When the ATO reviews you, and if you do not have the right tax governance in place, that's what is going to give rise to a higher risk rating. It will then simply mean that the ATO reviews your affairs in more detail. It will mean that they review them more frequently. I think is probably the best way to put it. But there is no specific penalty for actually not complying with this, because these are just ATO guidelines. It's not legislation.
Yeah, that's right.
That is, I mean, I'll wait a couple more minutes if anyone else has any more questions. Or if anyone wants to put their hand up, maybe they've got a question that's too hard to type up. But otherwise, thank you all very much for attending. I hope you found it useful. Hope everyone managed to take something out of it. I'm appreciating that there were different attendees from different types of businesses. And obviously, you know, I think the slides are going to be circulated with our contact details. If you've got any specific questions, by all, you know, feel free to email us, give us a call. Always happy to have a chat.
Yep. Thank you very much.